Well, after yesterday's market close, the price of gold rebounded above the $1,500 mark. That was its highest level since 2013. Gold is up about 15% this year so far. Right now, still above 1,500, as you can see on your screen, at about 1,513, but down about 0.1% in the last 24 hours. Here to talk more about gold and its recent price hike is Juan Carlos Artigas. He is Director of Research at World Gold Council. Hey, Juan, thanks for coming on.
Thank you so much for having me.
So what is going on with gold? Is it just the obvious of safe haven? There is so much uncertainty. There's a trade war going on. Or is there something else you think in terms of the investment maybe appealing to younger people lately?
The way that we can think about gold performance so far this year is that there have been two key drivers. One of them for sure uncertainty, but uncertainty is not necessarily new, right? We have had this type of environment for some time. I think that is compiling also with the fact that interest rates are falling. In particular, monetary policy has done a 180-degree turn over the past year. And it's not only in the US, it's the Fed, like the Fed, but also the ECB and various other central banks around the world. Gold is a truly global market, and it's also responding to that. The opportunity cost of holding gold is going down. At the same time, lower rates are also creating uncertainty for some investors, right? In Germany, you are having negative nominal yields. 70% of developed market debt is trading with negative real yields. So that's concerning for many investors.
So then can you see right now where most of the gold buying is coming from in the world?
Yeah, well, there are different ways to look at this. We have quarterly reports on demand and supply from a really broad perspective, but there are also more timely metrics. For example, gold-backed ETFs, you can see pretty much on a daily basis where flows are going. And interestingly enough, something that was a phenomenon primarily in the US and North America 10 years ago, today is truly a global phenomenon. In fact, most of the flows so far this year have come from European funds. So European investors are also, perhaps choosing with their dollars.
Right. So we're seeing the gold price down just a little bit today. Do you think that 1513 was its peak, or do you think it's going to go even higher?
Look, I think that the better way to understand this is gold is, like any other asset, going to fluctuate. There are definitely fundamental drivers at play today, and one of them is uncertainty. Right? Uncertainty is not going to go away anytime soon. Again, opportunity cost is reducing, or lower interest rates are reducing the opportunity cost of holding gold. But more than anything, gold tends to be a very effective diversifier, a very effective mainstream portfolio tool for investors, not only individual or institutional investors, but also central banks, which have been, in addition, also buying gold. This year would be the 10th consecutive year.
When you were talking about those ETFs, were you referring to ETFs like GLD, or which ones were you referencing? Yeah,
gold-backed ETFs around the world. There are many that are listed in the US, but we track around 80 funds around the world. So again, this started in 2004 in the US and kind of started to create momentum, and a lot of the initial flows came from US listed funds. But by now, again, it's truly a global phenomenon. Even there are funds listed in Asia and other parts of the world.
Just briefly, while we have you, another asset that has been up big in the last year is Bitcoin. And people in the cryptocurrency world have really tried to fuel the idea of gold versus Bitcoin. Bitcoin believers consider that a safe haven a little bit, although it certainly fluctuates wildly. What do you make of the comparison, and what do you make of the recent rise of Bitcoin and some other cryptocurrencies? Yeah,
look, I think it's really inaccurate to compare the two. Cryptocurrencies, there's a thesis for investing in cryptocurrencies, and you can see so far this year they have rallied quite a bit, right? But actually, to your point, the behavior is more speculative. The volatility is very high. When you understand actually gold, there's about more than 50% of demand goes to jewelry and also technology. Every single mobile device or computer that you interact with has gold components, right? So there's an actual application that is linked to consumer demand that makes gold unique as an asset class. Forget about cryptocurrencies with respect to anything, right? So yes, indeed, gold is used as a currency or as a safe haven by many investors, right? And it is seen as a financial asset by many investors, and that's really important. But again, when it comes about the thesis on how they relate, the only comparison that you can make is whether the production from mining is constrained. But again, Bitcoin is one currency. You have 2,000 cryptocurrencies and crypto assets. The comparison is not fair. There's a different role that they play, and we think that they not only can coexist, but actually as a strategic asset, gold makes far more sense.
All right, you heard it there. Juan Carlos Artigas, thanks so much.
Thank you so much for having me.
Gold Talk.